Right now.
Leslie Picker has today's ETF Edge. Hi, Leslie.
Hey, Scott. Thank you. And with stocks bouncing back today and most of the big tech earnings behind us, investors who are overweight those names often find themselves stuck between taking the tax hit and diversifying. Our next guest is taking an approach that could help investors. Joining us is Bruce Lavine, COO and head of ETFs at Astoria Portfolio Advisors. Bruce, you're working on essentially a large cap 351 fund. How does it work and how might it help investors?
Thanks, Leslie. Yeah, so a 351 fund is a relatively new thing in ETF land, but it's based on some tax code going back into the 1950s around corporate formation. And so what it lets you do is at the very launch of an ETF, just one time the day before it lists, investors can provide a portfolio of securities that meet certain diversification guidelines. And if they provide those, they can get back our fund. And so they can achieve, think of it as tax-free diversification out of some very concentrated overweight names. And I was just looking before I got on here at NVIDIA, for example. At the start of 2022, it was trading for $30 a share. So anyone who's held a sizable position in NVIDIA, for example, has got some real concentration issues. And it's hard to find other tax solutions that do what the 351 does.
Yeah, it sounds like this would be something kind of prime for the time of overconcentration, particularly in some of those Mag 7 names over the past few years. How popular of a strategy? You mentioned it goes back to the 1950s in terms of the tax code, but based on today, how popular is it, and how might kind of technology play a role in the advent of this?
Yeah, they're getting more popular. There maybe been about 15 or 20 launched, something like that. I think they got popular because of these crazy overconcentrations that people are having, because stocks are up 200% and 300% mostly in the tech sector. Although they also solve legacy issues from years ago when people inherited stock, where people work at a company and have big, insider holdings, that kind of thing. So, we see more of these happening going forward, and I think the word is just starting to get out there now.
All right. Thank you for sharing that with us. We're going to continue the conversation over at etfedge.cnbc.com. I will send it back to you, Scott.
All right, Les, thank you.